Gareth Soloway is back. He is the chief strategist of Verified Investing. We'll be talking about specifically Bitcoin today. Bitcoin's meteoric move has shocked investors worldwide. What's next for Bitcoin? Is it going to surpass its previous all-time high of $69,000? It's currently above $60,000 as we speak. Today, can it surpass $100,000 later on in the year? We'll be discussing these themes with Gareth, as well as gold, which has also seen a recent surge. So what's next for these two asset classes? How do they fit into Gareth's longer-term outlook for the economy and the broader markets? First, a shout out from our sponsor, iTrust Capital, an IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1%, as well as unique tax benefits. If you're over 18 and you want to open a new account with cash or roll over an existing account, click on itrust.capital/David in the link down below to learn more. With Bitcoin rising to almost its previous all-time highs, now would be a good time to start thinking about where to park your Bitcoin holdings. An IRA may be a good place to start. Gareth, welcome back to the show. Always good to see you.
Hey, thanks, David. Great to see you, buddy.
Great to see you as always. We spoke 2 weeks ago. We gave a longer form interview for the audience. I'll put the link down below. People can check out Gareth's views from 2 weeks ago. I don't think too much has changed in your longer term view. So today we're just going to talk about the recent moves in Bitcoin in particular and a little bit of gold. Before we do that, because Bitcoin is nearing its all-time highs, that's why I brought you on today. Before we do that, just general overview, what's going on today. Big picture stuff. So stocks are going up a little bit. Bitcoin's down 2%. We'll talk about that. Dollars down. Gold is slightly up. So what are things reacting to today?
Yeah, so over the last couple of weeks, we went through a period where CPI and PPI came in hotter than expected. And then yesterday, by the way, since those CPI and PPI numbers, the market started to get a little nervous, right? But what we saw was that yesterday, the PCE data came out that calmed nerves. The markets rallied. And today, we just got the ISM data out, which came in weaker than expected as well. And again, a lot of people out there probably like, wow, weaker data, not as good. But weaker data means the Fed may be printing or lowering rates sooner. So bad news is good news. That's the environment we're in, especially if the PCE data is the one we're going to go by, which is telling us inflation is still kind of sticking around this 3% level. So what we saw today is the dollar starting to drop. That kick-started gold. Gold is having a huge move. It looks to me like it's borderline breakout. We know Bitcoin's had a big move recently, but that's really just a summary of what we're seeing today.
Okay, let's start with Bitcoin first before moving on to gold. Can we pull up a Bitcoin chart?
Absolutely.
Yeah, Bitcoin has been, you know what's interesting, while you're pulling that chart up, I'll just make a comment. It just seems to me like I'm scouring Twitter, and of course the cryptoverse is excited about this, but not a lot of other people outside the crypto ecosystem are talking about Bitcoin. I remember in 2021 when Bitcoin was on its way up, even before 40K. Remember that when it was on its way up from like, a couple $1,000s to 20,000 and then 30, and then every CNBC was talking about it. Pretty much every single mainstream media on planet Earth was focused on cryptos at the time. It was all the hype. I'm just not getting that hype right now anywhere except on like Twitter and people already in the crypto space, right? So it's just interesting to observe what's going on. It's already near all-time highs. I'll let you comment on what's going on.
Yeah, so I think there is a little buzz out there with the spot ETF. And, I was just talking to a couple traders in the office. They've had people contact them that have never invested before saying, hey, should I get into Bitcoin? Again, so you're starting to see that spread a little bit more. But you're right. I don't think we see the craziness that we saw back in, 2021 or in 2017 yet. Now, that's a positive because once you see that absolute insanity permeate every investor, it's usually closer to the top. Having said that, again, after what we've seen, and we can see the chart very clearly here, we've had this big move up here. We did come into a little resistance. I still remain long-term very bullish on Bitcoin. I think, again, as a store of value, it will eventually migrate to that. Right now, it's a risk asset. And I think that's, if you're looking for the bull case, the bull case is still very overall in the world underinvested. 21 million max supply. These type of things are the key bullish things. We have the halving coming up as well. The bearish side of it would just be more in the short term, which is that risk assets have gone nuts to the upside. Stocks like Nvidia and Microsoft. I mean, so many of these names that were not even close to $1 trillion a few years ago are now north of $1 trillion, if not $2 or $3 trillion, right? So you've had this major risk on environment, and that I think has also benefited cryptocurrencies and Bitcoin as well. So my biggest fear for Bitcoin, and this is the only bear case that there is that you will have some sort of correction at some point. And the question is, how much does Bitcoin get driven down? But if we zoom out on this chart, we can see again, you go back to this low down here. I mean, we were trading at 15,000 and change, and it just continued to kind of grind higher. And then you're getting a more accelerated move here, which again, usually comes at the end of moves. Now, again, please understand, everyone watching, end of move doesn't mean, hey, it's over. It just means it might need to pause or pull back here in the shorter term before gathering momentum to push up through. So again, amazing move. Again, notice where we just stalled out. The 2021 high pivot. In fact, I think we had an interview back here when this was at 65,000. And I said, hey, it's going to drop to 30,000 because of a head and shoulder pattern. And it dropped to 30,000 within a week. I remember you had me back on. Then we went up to 69. So you basically have your two levels of resistance here, 65 and 69,000. Watch those in the coming weeks.
Just from a technical perspective, Bitcoin has had a history of seeing these double tops before retracing into a longer term bear pattern. So I don't know if that's what we need to see this time because it's at 61K as of today. I don't know. I'll let you comment on whether or not you think it's going to continue going up or it's going to see another double top before we see a retrace.
Yeah, so that's going to be the key. There's a lot of resistance at 65 to 69. So, if you look at the shorter term, this move right here that we just saw over the last 5 days, this 3-day bar surge on the daily chart, that was the easy move. There wasn't any major pivot top in this range. Now you're getting to points where people remember. People have this memory, right? And it's programmed in them, the scariness of, oh my goodness, I bought at 65 and it dropped to 30. Then I rebought when it got up to 69 and it dropped to 15. And that generally will cause a small group to sell. The question is it big enough to offset the new money that's coming into the ETFs, right? The spot ETFs continue to see inflows. The one thing I will point out, a lot of crypto people, they don't understand as much the market environment, meaning that while there's a lot of inflows into spot ETFs right now, it goes both ways, right? If people get scared, and this is again going back to that case of the stock market, and by the way, let's bring up the S&P 500 here. If we take a look at this, the S&P stuck in this very, very tight and tightening wedge pattern. So let's just say we break to the downside and it starts a bigger sell-off. What happens then? Do people start pulling money out of the Bitcoin ETFs, and then do the Bitcoin ETFs have to sell Bitcoin? Right now, it's all buys pretty much, I mean, give or take. But again, people just have to understand it goes both ways, at least in the short term. I think longer term, Bitcoin, that store of value, digital gold, it's awesome. But again, I do worry about that stock market correction influencing Bitcoin.
Yeah, I think this is the single biggest ETF or series of ETF launches in history.
Ever.
So the 10 new Bitcoin ETFs netted a record. I'm just reading some stats here. $673 million in inflows on Wednesday, February 28th. Total Bitcoin ETF trading volume hit 4.69 billion as of yesterday, Thursday. Now, the new Bitcoin ETFs are, there's a chart here I'll put on the screen just for the audience to see the inflows from these ETFs. Just can you explain to the layman how ETF inflows affect the spot price?
Absolutely. So ETFs by themselves, they have to back whatever money comes in with actual Bitcoin, right? So if let's say right now Bitcoin's trading at 61,300 and change, 300 and change, if someone puts 61,300 and change in that ETF, then they have to go out in the real market, in the spot market, and buy a Bitcoin to back the ETF, right? So the idea is that, you have to have these assets that actually have something behind them. Otherwise, I mean, if these ETFs didn't have to back anything, technically you'd have unlimited supplies of Bitcoin. And again, that wouldn't be no good, right? So you have to back it. So if people are buying millions of dollars of the ETF, then the ETF has to go buy millions of dollars of Bitcoin. Now, remember, it works both ways. So if people start selling the ETF, then they have to net sell Bitcoin as well. So again, right now there's so much excitement, there's risk on, there's so much liquidity in the system. One thing I would like to point out is the banking. So what we know is that reverse repo is starting to come back in. So again, reverse repo was where banks were pushing money into the Fed and getting a great interest rate on it, and the Fed was holding money. It was a way of sucking liquidity out. Interestingly enough, reverse repo put in its highs when the market put in October 2022 lows. And then eventually the Fed has been sending that money back to the banks. So it's money coming into the system back to the banks. We also have this emergency loan program that ends on March 11th. I'm sure you've talked about it before, but with that ending, that will be a spigot that gets turned off in terms of liquidity. So my everything I'm seeing is March is a warning month. Let's see if we can get through March with less liquidity in the system. Do risk assets start to sell off?
This is one reason that was provided by Grayscale Investments research head Zach Pandel. So as of the beginning of February, these ETF products have purchased an average. I'm reading an article here from Yahoo Finance, an average of 3,500 to 4,300 coins each day. To your point about these products needing to acquire spot Bitcoin. And this is considerably more than the roughly 900 coins being created every day. So the supply is being taken offline because there's more demand than supply.
Yep.
But yeah, that's the key here
And
right now.
I think
Sorry.
only about 900, I could be wrong, but I think around 900 new Bitcoin are mined a day. So
That's right.
supply, like you're saying, is much lower than demand, which obviously, economics 101 causes price to go up.
Yeah,
Absolutely.
yeah, exactly. 900 coins being created a day, about 4,000 coins being needed each day for these products. So to a certain extent, it's a demand supply story, not just a technical story.
Mhm.
Going back to something important you said, eventually demand's going to taper off, right? Eventually, either we're going to have a steady state inflow, or the hype's going to be over and people are going to start selling. What would probably prompt that to happen?
Yeah, so I think the biggest thing is just people getting scared, right? So if we do see, let's say, all of a sudden the U.S. economy starting to enter a recession, we saw ISM data very, very weak today, or if the Fed all of a sudden comes out and says, "Oh my goodness, inflation looks like it's starting to go up. We have to keep rates higher for longer." Any sort of scenario like that, I think, puts the market overall risk assets, which again includes Bitcoin. Now, again, I think Bitcoin eventually becomes the digital gold, but it's not there. Clearly, it's not there at this stage of its career yet. But at this point, it's a risk asset and would fall with risk assets.
Can we please pull up a Bitcoin chart one more time? I like to compare it to the NASDAQ and just see how the two have performed
Sure.
together or moved together over the last, I would say, couple of weeks.
Yeah, absolutely. That's a great idea to do. Let's bring that up. So let's bring up the QQQ here and
Okay.
pump this out here. Oh,
And the reason I bring that up is because historically they've moved in tandem. I just like to see if the scale of the move has been comparable, or if Bitcoin is starting to move on its own. Uh, it's got a life of its own right now because of the Bitcoin ETF, but we'll see.
yeah, so just here's the two charts, right? So the blue one is the Qs, this is the QQQ, and this is the Bitcoin chart. And you can see the Bitcoin chart was underperforming for a while because again, as a riskier asset than the Nasdaq, for instance, in bad markets it's going to underperform, but now you've got a cross where it's crossed above because in good markets it's going to have a better result. And that's a classic case of the higher risk asset. So again, if you put Apple, for instance, next to Bitcoin, which one has a higher beta, a higher movement? Definitely Bitcoin has a higher movement. So it's going to underperform in bad markets while overperform in good markets, which is exactly what we're seeing right here.
Is there just a specific event that happened in the last 2 days? Because I cited the fact that the Bitcoin ETFs have needed additional demand, but that's been happening all throughout February, right? But if you look
Yeah.
at what happened all throughout February, yes, there was a rise, but there wasn't a meteoric upshoot over the last week. So
Yeah.
could we pinpoint it to something particular, Gareth, or not?
Yeah, so to be honest, I think what it was Nvidia's earnings last week, right? So when you had Nvidia's earnings, and this is something that I pointed out recently, is that Nvidia had this monster move. The stock market had a huge move up on that day, and once that happened, the stock market went to sleep. Now, when Nvidia had earnings, what did Bitcoin do? Bitcoin didn't do anything. If we go to the Bitcoin chart here, this was Bitcoin over here. It basically was going sideways. And so you had risk assets like the tech stocks going crazy to the upside
Okay.
and Bitcoin was going sideways. So there was this delay effect where it basically, once the stock market went to sleep, money that was looking for a home said, wait a minute. All right. So Nvidia just rallied, all these other stocks in the stock market rallied. What hasn't gone yet? And the answer was Bitcoin. And you kickstarted this move up. So again, it was a delayed reaction of basically money saying, okay, the tech stocks and the markets are now at a peak potentially. Let's move some of this money into Bitcoin. And then once the momentum started, I think a lot of stops went for running for cover, and a lot of other factors kicked in.
This is another interesting development. As of February 29th, the U.S. government moved the $922 million of seized Bitcoin after BTC price broke $60,000. The U.S. government transferred $922 million worth of Bitcoin from two cryptocurrency wallets that held funds seized from Bitfinex in 2016. The government's transfers occurred the same day Bitcoin breached $60,000 for the first time in over 2 years on Feb 28th. Bitcoin rose 5.5%. So yeah, even the government is taking notice. MicroStrategy, another example.
Yep.
They announced on Monday morning that it's buying an additional 3,000 BTC, bringing its total Bitcoin holdings up to 193,000 Bitcoin. Bitcoins. Incidentally, MicroStrategy stock gained 46% over the last 5 days. So, a lot of whales moving into the markets or moving
Yeah.
markets. I don't know if you would have called if you want to call the U.S. government a whale, but anyway, they're currently doing things on their own
Well,
as
I
well.
think the U.S. technically, I think the U.S. government is the biggest holder of Bitcoin individually. I mean, obviously, as an
Yeah.
entity of a whale, because of all of the Bitcoin they've seized over time. The question is, do they decide to unload it or do they just hold it?
Yeah, good point. So, looking at this chart, if we were to sum it up, Gareth, what would you do with Bitcoin right now is ultimately what people watching this will want to know.
Well, I can just from my perspective now, remember, I'm a swing trader, so I don't really have a long-term perspective. If I did, I would be holding. I do have a small hodl position from 17 that I talked about back when I bought it. It was only a 1/6 position. I was hoping it would drop below 17. Every 3,000 down, I was going to add more. I never got a chance to add. So I just have that little bit. Aside from that, I swing traded. I am short here around the 60,000 or just shy of 60,000, but that's a swing trade, meaning that if we drop back to 50 to 49, which was that previous peak, remember when the spot ETF approved, it topped out at 49. That would be my retrace. And then you could start to look to buy at that. So I'm going to cover my short around 49.50, and then I'll decide if I want to go long. I think ultimately it's a buy the dip scenario, but just be aware that if the stock market really gets in a bad shape, you have to maybe wait a little bit more, let it dip a little bit more before you rush in, because things like this asset, I mean, you saw it go from 69 to 15 in basically a year. You have to be aware that dips can be more than just 5 or 10%, right? It can be dipping 50% if the conditions in the economy and the central banking system are the right conditions.
Okay. All right. Now let's turn over to gold.
Yep.
You wanted to talk about gold as well.
Yeah, gold
Big
is
moves in
now
gold for
borderline having a big breakout here. And this is something I've been talking about for a long time. I said, listen, it's going to happen. It's a matter of when, not if. We had this beautiful little consolidation, and now look at today's move. Gold is up 1.5%, which for gold is a big move. And it's right into that level. If I zoom out, this is the level going back to the highs of 2020 that we keep on hammering. And we still have this beautiful inverse head and shoulders that calculates a target out to about 2,500 and change when all is said and done. And the one thing I'll say is, again, I've said this before, but central banks have been buying more gold than ever before. I mean, they are just loading the boat, and these guys are the ones that print the money. And so, again, for me, it's like, okay, if they're the ones that have their finger on the printing presses and they probably know they have to print more at some point due to the debt situation in the world in these countries, then I've got to have some gold on the long side, some gold miners. Gold miners have been horrendous performers, but to be honest, they look beaten down. Look at Newmont Mining right now. I mean, Newmont Mining just hit levels it hasn't seen since 2018, 2019, and is now starting to rip to the upside here the last couple days. So if gold breaks out, the miners are going to rock and roll here, and there's a lot of potential upside here. And we aren't even in a scenario, right? And let me point this out real quick, is that the scenario we are in, risk on, VIX low, markets at all-time highs, Bitcoin. I mean, everything would tell me that if I didn't look at the gold chart and you just said, hey, this is what's going on, I'd say, oh man, gold has to be 20% off of its all-time highs or 10% off its all-time highs because it's a risk on environment. No one should want to own gold right now. However, gold is at its all-time highs. And that tells me again that once you get a little fear in this market and money flows out of risk assets, it is going to gold. And gold, I think within 12 to 18 months is over $2,500.
12 to 18 months. Okay. So it sounds like you're a little more constructive on gold in the next 12 months than on Bitcoin. Is that a fair assessment to make?
Yeah, just because I am worried about the global economy and the domestic economy. I mean, we know where China is, but the US has been fighting this off. And at some point I do think that there's only so long you can postpone a recession. I don't care how much money you print, something bad will happen eventually. And so to be honest, gold is the one asset that's really hasn't gone anywhere in the last 4 years. And so it makes sense that as a safety hedge, this might be the one that outperforms while other risk assets like crypto and stocks actually come to the downside. Now, again, if you ask me, is gold a better performer than Bitcoin over the next 5 to 10 years? No. I mean, Bitcoin will be far outpacing gold, but at least for the next, 12 months or so, I would definitely favor gold here at this point.
Right. Just on Bitcoin one more time. Yeah, I was on Twitter and a lot of people were posting pictures of themselves celebrating the recent price moves. That congratulations to the new bull market. And I thought to myself, what new bull market? I mean, it's been on an uptrend for a year. I don't know where have I been sleeping? Have I missed something? Is this if you were just to well, I'll come back to gold for a minute, but if you're just to look at the chart, Gareth, would you make the conclusion that this is the beginning of a sustained bull move, or just the tail end of something that's already been happening? How would you evaluate this from a chartist perspective?
Yeah, so it depends on the time frame. Like if you're a day on the daily chart, Bitcoin has already had a monster run. This is certainly not the beginning of a bull market. Now, I'm not saying it's the end of the bull market here, but it certainly wouldn't be the beginning. The beginning was obviously 15,000 and change, and then every 10,000 up is just advanced, advanced, advanced. Now, if you look at the 10-year chart of Bitcoin, well, it continues to make higher lows, right? I mean, from where it started to every dip on its bear market, it continues to make higher lows and really higher highs as well. So I think if you again have if you're someone who or for me, like my time horizon, if I'm saying, hey, I want to hold Bitcoin till my retirement, 20 years, let's say from now, then doesn't really matter if I buy at 60 or 50 or 40. The idea is it's probably higher by that point. Again, if you're looking for a swing trader like me, then no, there's no way I'm buying up here after such a mammoth run. Does it mean I could miss out on some upside? Sure, I could. But you know what? There's so many other things to trade that I'll just find a different trade and wait for a better setup on Bitcoin.
Could you could you make a similar assessment with gold, meaning that over the last 2 years, I mean, I know gold moves in a slower time frame than something as volatile as Bitcoin, but over the last couple of years, gold has had quite a nice run. It's all right. It's probably a little bit too late to get in now. I know you've got a 12-year, 12-month or 18-month horizon of $2,500. That's a nice move, but you know,
Well,
yeah,
so this is the kicker, right? I mean, if we look at the longer term chart on gold, it's continued to make higher lows and higher highs as well, right? I mean, here's your chart going back to the
sure.
1960s and 50s and so on and so forth. So I think again, the same thing could be used for gold as with Bitcoin is that if your horizon is long enough, then it's fine to do. Also, I would say the difference with Bitcoin is that while Bitcoin, the short-term trade, is, to be honest, is sideways or down, the short-term trade here on gold is to the upside, right? We haven't
Mhm.
gone anywhere in 4 years. It's been building energy. And what we could see here, look at this. I highlighted this level here on gold because this almost looks identical to what this is doing here. And look at the result. Once we broke out, we made this huge move to the upside from about 1,300 and change to 2,000 and change. And I could see that replication again taking us north of that 2,500. So I still think that the trade on gold is way early here. It's barely moved in the last 4 years, while every other risk asset, I mean, if you looked at things where they were at the lows on COVID versus where they are now, every risk asset is way, way higher versus gold. Gold really, since COVID, hasn't really done a whole lot.
Yeah. Would you hypothetically, I'm not saying you have to make this trade where you will make this trade, but hypothetically, would you place a pair trade, meaning long gold, short Bitcoin right now?
Right now, yes. But if Bitcoin pulls back to 49, 50,000, then I would take the Bitcoin short off
Okay.
the table. But yes, right now, that would be a fine pairs trade for me. For my risk tolerance, obviously, everyone has to do it for themselves.
The Bitcoin dominance chart, I'll put on the screen as well, is now 54%. Does that signal to you that altcoins may be in favor?
Yeah, it's so tricky on this, right? Because I actually have a breakout on Bitcoin dominance. So
Yeah.
Bitcoin dominance is retracing here. Look at this. Look at this channel here on my chart and the breakout here. And now we're retracing back into it. So I actually think that altcoins actually are at a lot of risk here. I want to show you a couple charts. So with this move, if we look at some of these, like these are in the top 50, right? Like Celestia. This is one of my current shorts on the crypto side. look at this move that it had, and then look, it's not even waking up. Now, it doesn't mean it can't wake up, but this is not the price action in a risk-on environment like we're seeing right now. Now, again, could some money flow into it? Maybe, but ultimately, I think if we see risk assets start to sell off, the altcoins get hit even harder from here, and you can see Bitcoin hold up better. I still think Bitcoin comes down. I just think the altcoins are at a greater risk of downside in my scenario that we have a recession or the inflation numbers stay neutral to higher from where they are now and the Fed can't lower as much. Those type of scenarios are bad for risk assets.
Okay. All right. Let's close off on key levels. That key levels for Bitcoin and gold that you would be watching out for. You mentioned on Bitcoin downside 40K or 50K.
For 49 to 50K downside support, resistance on the upside is 65, then 69. Again, watch for that double top at 69. That's going to be a huge level. And then on gold, if we can have a couple daily closes above, let's say 2080, that would be a major breakout that would probably kickstart a very vertical move. And again, the way to play that is gold or the miners. The miners are higher risk, but also higher reward. They'll go up more usually in a bull market in gold.
Generally speaking, if you take any market, Bitcoin, gold, stocks, whatever the case may be, if something breaches its previous all-time high, would you take that as a momentum play and ride that a bit further? Or would you say, all right, well, psychology dictates it's time to take profits?
No, so you have to be very careful on that. So the best example of that is on the bull market of 2021. Let me pop my screen back up one more time so we can look at this. So here was a great example. Bitcoin made the high in April. It made a higher high in November. And this is very psychological. What ends up happening is that when it makes a higher high, all the remaining people that were on the fence jump in. They're like, "Oh my God, it's breaking out. You know, this is going to go to 100." And I still remember when I was calling at 69 for a move to 20,000, you know, there were people saying by end of month of November, when this was high was being put in, we were going to be at 100K. And then 250 was like end of year target. That lures in the last of the potential bulls buyers, and the shorts stop out. And once you get to that kind of imbalance and there's only buyers there, then you really don't have any sellers left to go, or there's no more buyers, I should say, left to buy. And that's where you see these reversals. So I'm a big fan of when you see a breakout like this, a double top breakout, be skeptical until it holds above for a certain amount of time. Just like with gold, right? Gold's coming up to that level. Don't just, if gold just closes above one day, above 2080, don't be like, holy cow, this is a big breakout. Let's see if it holds above for a couple days. It's better to be safe than sorry, especially when you look at this Bitcoin chart and what the resulting down move was.
I'm seeing, speaking of 100K, we'll leave it here. Speaking of 100K Bitcoin, I'm seeing a bunch of headlines pop up actually in the last couple of days.
Mm-hmm.
Mike Novogratz is calling for 100K ahead of the 2024 halving. A lot of people are calling for 100K post halving. Standard Chartered Bank last year in 2023 was calling for 100K by the end of this year, which is 2024. Do the charts support a possibility or a strong possibility of 100K by the end of the year? Chart, Gareth.
If the liquidity in the system, like let's say, so the Fed's going to shut down some of the liquidity in March 11th, that emergency loan program ends, reverse repo obviously is coming back to normalized levels, which is money flowing back to banks. If we see an increase in liquidity in the system, it absolutely is on the table. I just think that, again, any sort of increase in liquidity with markets at all-time highs doesn't allow the Fed to really maneuver because it's going to keep inflation high. I mean, like going back to the Fed, there is no way the Fed can cut rates aggressively with the stock market at all-time highs and inflation still around 3+%. It just cannot happen because they are way too paranoid about what happened in the 70s and having a double peak on inflation. So again, it's all about that liquidity in the system. Watch it like a hawk. In fact, you can watch like net assets, watch the Fed balance sheet, watch all these M2 money supply. If that starts going up, anything's on the table. If those start coming down, then asset prices likely come down.
I like how you have a slightly different way of explaining things from other people. So it's more about liquidity from the monetary system than it is about the halving itself.
Yeah, and I think that was one of my, if you go back to 2023 when we were talking, I was expecting a recession by year end, to be honest, of last year. We talked about that early in the year. I said by year end. It hasn't happened. I was wrong on that. I wish I looked at the liquidity in the system. I didn't realize how much money the Fed was pushing towards the banks when the banks like Silicon Valley were failing last March, because it was a huge boost in liquidity. And ever since then, the markets have been ripping higher. They're supposed to be shutting it off now in March of this year. So just now in the next couple of weeks, if for some reason that does not get shut off, then markets can keep going higher, including Bitcoin.
All right. Well, we appreciate that, Gareth. Thank you for your analysis and your outlook. Where can we find out more about your world? Tell us more about verified investing and some of the projects you're working on right now. Some updates.
Yeah, so Verified Investing, guys, is a website. We are just about to launch the new website, and it's basically a place where the best traders and investors in the world can come and post their trades, post their content. I'm trying to make it the elite of the elite, so that every retail investor has access, right, to my education, to other people's education, all of that stuff. So check us out in a couple of weeks with the new website being launched. I'll be on there posting my trade setups and my analysis, as will many other amazing traders out there. And that's really my new goal here. Is I just want to, give back, give people that ability to combat the algorithms, the AI out there that's fighting you on trades and that's trying to maneuver. But yeah, check me out at verifiedinvesting.com.
All right, we'll put the link down below. Thank you very much, Gareth. Appreciate your time. Thank you for this emergency hit. We'll speak again soon.
Thank you so much.
All right, take care.